Let's move on and get back on earnings. Crompton Consumer, that's the company which is we are talking to right now. Mr. Kaleeswaran, who's the CFO, is joining us to talk about the earnings fine print. A very reasonable growth as far as the top line goes. Margins also held out this time around. Profit growth of almost 13%. Mr. Kaleeswaran, talk to us about, is the worst over? The sector saw some headwinds last few quarters, I would say, and it appears that it is troughing out the space. Did you also observe the same in this quarter? And going forward, do you see sequential improvement in numbers?
Hey, hi, good afternoon. Happy to talk about the Crompton performance. And see, largely this is attributable to our Crompton 2.0 strategy that we got it launched about 2 quarters back, where we prima facie said as an organization, we want to move towards growth-oriented mindset. That means that we need to invest behind our brand, drive innovation, and also invest behind our people. Now, if I put all these things together, what you are seeing is 2 quarters of very strong performance from our end, led by our ECD category. Now, within the ECD category, we have got broad-based growth across all the categories of ECD doing well. Let it be fans, pumps, the large domestic appliances comprising of geysers and coolers, or the Crompton kitchen that we have entered via mixer grinders to start with. The second facet of this is we also said that our lighting business, our primary focus is to arrest the decline and get back into growth path. I'm happy to say that that has also started. So overall, we are pretty happy in terms of how it has turned out. While you do see the economy is moving towards more a K-shaped recovery, this also gives us a great opportunity to drive upon the premiumization agenda that we have been working across all our categories in the portfolio. So from all this put together, working on the go-to-market side, including e-commerce, getting the new products onto shelf, coupled with the growth-oriented mindset, has helped us to grow very strongly in the last 2 quarters. And we do think this is an agenda that is here to stay for years to come.
So, what kind of improvement are you aiming towards in operating metrics, and what levers specifically would be pressing to achieve them?
See, overall, we do still think there is room to improve on the gross margin. This is largely led by our fans category. As you would know, fans went through an energy rating compliance requirement during last calendar year, and that would meant that about 10 to 12 percentage of cost increase had to be absorbed. While we could negate some of that through innovative cost reduction programs plus price increases that we could take, there is still headroom for us to further improve and restore our gross margins in fans. That's one area we do think will help us to improve the margins further. Second, on the cost side of it, while we have been very good in driving direct cost efficiency, indirect cost is something that we have not looked at in the past. We do think there is about 10 percentage cost reduction opportunity in our indirect spends also, for which the work has commenced. And as we get into next financial year, we should start seeing results on that too.
All right, Kaleeswaran, we'll let you go on that one. Thanks so much for joining us on the show today. That was Crompton Consumer talking about the improvements they are aiming at, particularly the point on improvement scope in the gross margin.